These are the charts they don't want you to see. Who's they? I don't know. But it's about the dollar's death spiral. Let me ask you a question that might make you a little bit uncomfortable. If the economy is so robust, and if the labour market is so resilient, and if the soft landing is guaranteed, why are the architects of the global financial system quietly building a bunker made of gold? I wonder. You see, there is a narrative you are being force-fed. It's a comfortable narrative that we've all become accustomed to and even bludgeoned by. It says that the Federal Reserve is in control. It says that inflation was just a transitory supply chain hiccup. It says you should buy the dip because stocks only go up. And the US dollar's hegemonic status is unshakable and the bedrock of the entire financial universe. Congratulations, you have won the award for the most gullible, impressionable, malleable investor out there. You are being harvested, my friend. You are being farmed. Let's not be farmed. Let's not be harvest. Let's listen to the House of Trade with Justin Bantam. Like, share, and subscribe. So, while we're all fighting over the breadcrumbs in the S&P 500 and evading the stop losses, distracted by the latest AI bubble or by the political circus in Washington or around the world, the tectonic plates of the global order are shifting right before our eyes. I'm not talking about opinions here. I'm not talking about conspiracy theories. I'm talking about the cold, the hard, the unattractive mathematics of it all. And unlike the Federal Reserve Chairman, Jerome Powell, math doesn't know how to lie. Today on Technical Tuesdays, which is actually being filmed on Wednesday because I mugged up my schedule, we are going to be performing an autopsy. We are going to look at the patient, which is the US economy, and we are going to examine the cause of death before the funeral is even announced. Yes, we are. We are going to look at that data that CNBC et al. Is too scared to show you, or they don't think you're complex or sophisticated enough to understand. We're going to dissect that labour market. We're going to see why it's lying. We're going to look at the death spiral. We're going to see the MIC, which is not the microphone, it's the military industrial complex, and the insider positioning that shows you exactly where the smart money is hiding and where we should be positioning as well. By the end of this beautiful 15 minutes, you will understand why the smart money is running for the exit and why your 60-40 archaic portfolio that is completely out of date and not fit for purpose might actually be a suicide pact. Now, hopefully that doesn't get me unmonetized. But how do you unmonetize something that can't be monetized? I've only got 17 viewers, but hey, let's begin with the dissection. Again, like, share, and subscribe. My name is Justin Bantam. This is the House of Trade. Thank you for checking in. Okay, they tell you the consumer is strong. They tell you the consumer is robust. They tell you the people are working. They tell you job markets is robust and buoyant and healthy and ebullient. But let's look at the engine of the economy. No, not the service economy, which is just us serving each other overpriced burgers, let's be honest. But it's the people who actually make things that we use. This is where the PMI comes in. See that level at 50? That long gone memory, forlorn memory of 50? Yeah. That is the Maginot Line. Remember, like, your World War history and all that kind of stuff? Above 50 is expansion. Below 50 is contraction. Where are we now? We are drowning at 48.2 average. That line is dropping faster than a tech CEO's reputation after announcing a return to office mandate. Where do I come up with this stuff? And hey, while we're talking about PMIs, let's look at the ISM history. Every time we dip below this line that you see on the chart, 2001, 2008, 2020, we are essentially in a recession. The media calls it a temporary cooling or a transitory period while we readjust to productivity changes. I call it a cardiac arrest. The manufacturing sector is screaming recession, while the stock market is screaming all-time highs. It doesn't make sense. The math ain't mathin'. Bad news is good news is bad news, no news is no news. I don't know, okay? There is no news, the shutdown's still on. But wait, you say, Justin, unemployment is low. Surely the House of Trade knows that. Is it? Or are they just counting people with 3 part-time jobs as employed? Do we even have the data after the shutdown? Can it even be relied after the BLS has been highly politicized? Who knows? Let's look at the data that usually gets buried or obfuscated. This is the ADP employment change. Look at those big negative bars, boys and girls. This chart is more volatile than a crypto altcoin. 1 month we're adding jobs, the next we're flushing them. But look at the trend on deviation. When the private sector stops hiring, what happens? The game is over. That's what happens. The government can hire as many bureaucrats as it wants. But if ADP is flashing red, the tax base is eroding. We are relying on private data because we can't rely on the federal government data. And why do I talk earlier about the American system? Because that's all that matters. I hate to tell you, you cannot tax your way out of a hole when your citizens are losing their paychecks, or when you're not paying them at all, or when there's no way to check if they're getting paid, or if there's no way to see if they're getting employed, or there's no way to see if they're being hired because no one else fills out the surveys anymore. So, take a breath. If the economy is slowing down, surely the government is tightening its belt, right? Of course, they're saving for a rainy day. They're very, very macro-prudential. Very, very responsible when it comes to fiduciary duties. Oh my God, don't be ridiculous, my sweet child of summer. Eating on an ice cream and forgetting what reality actually is? No, they're not doing that. Obviously not. Look at this. This is the federal debt of the United States. They are running a deficit of nearly $1.78 trillion. That chart looks like the bank account of a trust fund kid who just discovered sports betting. Okay? They're betting it all, they're throwing it out because someone's going to pick up the tab elsewhere down the line. Another cycle of the political machine is going to pick it up. No one's trying to rein anything in. Doge was a failure. All of these spending cuts were a failure. The deficit cannot be shrunk, it cannot be tamed, it cannot be reined in. That's the US federal deficit. You are running a deficit of nearly 1.78 trillion. That is mad. We are spending money we don't have. Not me, them. Not you, them. Not us, them. To prop up an economy that no longer works. And this, my friends, is the apocalyptic, nihilistic result. 36.21 trillion in public debt. Let me say that again. 36.21 trillion in debt. Do you know the difference between a billion and a trillion? It's unfathomable to the human mind. Do you see that curve? Do you see the exponentiality of it? In physics, parabolic curves like that usually end in a supernova. In economics, they end in default or in Weimar-style hyperinflation. There is no third option. There is none, okay? There is none. But where is the money going? Maybe it's going on infrastructure. Maybe it's going on healthcare. Maybe it's going on education, right? Of course. No, don't be ridiculous. Wake up, smell the coffee. We have an empire to maintain globally. $997 billion on the military. Spending money on kinetic diplomacy to generate more GDP. Bloody ridiculous. Not to mention all of the politicians who are actually on the boards of these companies, right? Look at the trend. Up and to the right. War is inflationary. Printing more money to build missiles. The missiles blow up and you have to print more money to build more missiles. It's the perfect machine for destroying currency, for destroying your savings, for destroying the value of your unit of exchange, also known as the currency. So, just to recap, we have a dying economy and we have a spending addiction. How do you pay for it? How do you pay for it? Obviously, you print more of the reserve currency. But for how long, I hear you ask? The 17 of you in the chat, the one of you in the actual viewership. This is the US balance of trade. Have a look at it. You are bleeding nearly $60 billion a month, importing everything, exporting inflation. This chart looks like a budget written by a drunken sailor or a housewife who's given up the will to live. Now, look at China over there in the east. Over there? Over there? I don't know, right? Look at China, a surplus of 111 billion. Biggest surplus ever, $1 trillion surplus per annum. While the tariffs aren't working, while everyone else is buying Funko Pops or whatever they're buying and stacking that cash. Look at that. The US has a spending problem and China has a saving problem. You couldn't make this stuff up. You couldn't make it up, right? And for decades, China took those dollars and they bought US debt. Not anymore. That stopped. Why? Because of one thing. The Fed's funds rate. Not to mention the tariffs and the hostile environment. But the Fed's fund rate, okay? You had to spike it to fight inflation. Fair enough. But look at the long-term trend. Lower highs, lower lows. It looks like a career trajectory of a SoundCloud rapper after their first viral hit. Just a long, painful slide into irrelevance and probably drunkenness. Let's be honest about it, okay? It is mad. No longer are Chinese people or Japanese people buying debt hand over fist. You know what that means? The Fed is bloody trapped, boys and girls. If they keep rates at the level they are right now, the $36 trillion of debt interest will bankrupt the United States. And if they cut rates, what happens then? Inflation comes back with a vengeance. Hey, you called me transitory? How dare you? I'm here to show you what transitory really means, right? Now, let's have a look. The dollar index, DXY. Not a Confederate Dixie person, but it's the DXY, okay? Barely holding onto the trend line as it is. If that breaks, what happens? The floodgates open up. Now, seasonally, and I don't mean with a bit of marinade, the dollar should be strong right now. But if it breaks down during a bullish seasonal window, that's like getting hypothermia in July. That's like getting sunburned on a fresh piste in the French Alps. It means something is structurally broken. I mean, you actually can get sunburn on the Alps, to be honest. That was a rubbish analogy. Now, let's leave the macro and let's look at the actual casino. No, not Las Vegas, your pension pot. No, I'm joking. This is the part of the video where the chart bros on Twitter charge you $1,000 to see it on some ridiculous course. But me, I'm not charging you anything, so I've barely got any viewers. One day maybe I will, who knows? Get it while it's free, boys and girls, get it while it's free. We are going to be looking at the COT. No, not your unwanted baby's cot. The Commitment of Traders report and open interest. This is how we see who is truly bluffing. This is the COT report for gold. Focus on the two columns, okay? Managed money and producer/swap dealers. Managed money, that's the hedge funds. That's the trend followers. They are long. They are chasing the price, obviously, okay? What is the other column, I hear you ask? Look at the producers and the swaps. They are net short. These are the guys. These are the guys who actually own the gold mines. And they are hedging. When the spread between those two gets this wide, tension builds. It's a rubber band waiting to do what? Snap. That's what rubber bands do. Silly people. Remember that. But let's not forget that the Commitment of Traders report has been delayed for like quite a while now. So take it as you would. I'd hate to see what it is right now, given that the gold price has been quite buoyant, right? Let's move on to something that we can trust a little bit more. The open interest profile. Those massive bars at 4,200, 4,250. Those aren't just lines, my friend. Those aren't crow's feet making us look more handsome as we age. No, they are magnets. Market makers have sold those calls at those levels. So what do they need? They need the price to stay pinned so those options expire worthless, obviously. So the market doesn't move based on feelings. It moves to inflict the maximum pain, the maximum amount of pain on the maximum number of mugs. I mean participants, okay? The maximum number of us. Right now, the max pain is trapping price between these two massive liquidity nodes. And look at the change in open interest. We see traders adding exposure. The casino is getting super crowded. When open interest rises, the price stalls, it means energy is building up like a coiled spring, right? The breakout, when it comes, will be violent. Like a child who's been held under a chair. No, I'm not even going to complete that analogy. So essentially, the dollar is sick. The debt is terminal, and the casino is rigged, okay? When has it ever not been rigged? Where does that smart money go, okay? They go to the one asset that has no counterparty risk, boys and girls. No, it's not your mother-in-law. No, it's not the Bitcoin on the exchange that you don't understand or the key that you've lost. It is central bank reserves. So let's move over to that area of discussion and see what it means as well and what's going on in the charts, in the tea leaves. Well, Europe's flat. Europe's asleep at the wheel. Italy's trying to get in control of their central bank's gold, and the central bank's like, hell no, because we know what you're going to do with it, right? Look at the blue line, okay? That is China. Yes, China, again. Look at the vertical move. That's not a chart pattern. That's a middle finger to the United States Treasury. Et al. They are saying we don't trust your debt. We saw what you did to Russia. We saw what your treasuries aren't sanction proof. They are taking that trade surplus that we saw earlier, and instead of buying US debt, what are they doing? They're buying gold. It makes sense. That surplus is going into gold. That's why the gold price can't go down. There's a constant buyer, and they're price agnostic. They are hoarding bullion like it's toilet paper in March 2020. Do you remember those times? My God, why are people hoarding toilet paper? Ridiculous, right? Ridiculous. Now, they know the dollar weaponization is a risk. They are de-risking their entire civilization because they've seen what's happened. They've seen what happened in Russia. They've seen what happens to other countries. And now the EU is talking about using Russian assets to pay for the rebuild of Ukraine. I mean, put morality aside, right? I mean, that's a terrible phrase to say, but put morality aside for once and moral turpitude. But that's you can't do that in terms of sovereign assets, right? And that brings us to the end game. That is the gold cycle. History doesn't repeat, but it sure does rhyme like a poor SoundCloud rapper. Late 70s, what happened? Parabolic. 2000s, what happened? Parabolic. And now, we are coiling, about to go parabolic. This chart projects a target well over $4,000. And if it plays out, a single gold coin will cost more than your first car. Unless you're like some Trustafarian, right? I don't know. Maybe you have a really expensive Bugatti. I don't know. Maybe you woke up in it. Now, the charts have spoken. They have spoken loud and clear. The data is not lying, okay? The US is bleeding wealth through the trade deficit. The real economy is dying in front of you. The PMI is hemorrhaging. And the ADP data is just painting a poor picture. I don't know why they chose to release it weekly. Like we need weekly doses of melancholy, but now they are. The competitors are arming themselves with the weapon du jour, gold. And the government is spending us into oblivion with military and debt expansion. I say us, but I mean you, okay? You can choose to believe the soft landing narrative. You can keep your money in fiat currency that is being debased to keep this system alive. Or you can look at let's rename this. You can look at what the profitable money in the East is doing, not what they are saying. Remember, don't watch what they say. Watch what they do, okay? The storm isn't coming. The storm's here. The tornado's here. The tsunami's here. The flood's here. It's all here, okay? And you're going to get dysentery if you don't get out of the water. I made myself laugh. The roof is just leaking slowly, my friends. Enough that you haven't noticed that the water is indeed rising, okay? So hit the button if you prefer hard truth over soft lies. And subscribe so you don't miss the signal when the system finally breaks. I mean, when the system finally breaks, I don't want to live in a world where gold's 10,000. What does that mean? I know, I guess we'll see it then. And hopefully you subscribe, like, and share. For now, class is dismissed. Ciao for now. Thanks for joining me on another debasement round of the economy. Ciao for now.